Ja, herzlich willkommen zu einer neuen Ausgabe vom SI Talk. Ich bin in Wien. Wir sind auf einer Roadshow mehr oder weniger mit Inca One hier. Ich habe heute selber am Abend einen Vortrag und deswegen ist mir eine besondere Freude, George Moen von Inca One da zu haben. Er ist Vice President of Finance bei der Company und er wird Inca One uns ein bisschen vorstellen. Und es geht um etwas anderes eigentlich. Also Minen kennen wir ja schon, die bauen Minen, die suchen, bohren und so weiter. Die haben ein anderes Businessmodell und zwar geht es da um Tollmilling. Das ist nichts anderes als wie Fremderzverarbeitung, so dass ich es auch rausbringe. Das heißt, sie kaufen Erz an, denen interessiert die Mine überhaupt nichts, also die haben kein Risiko, dass sie irgendwas suchen müssen, sondern sie kaufen nur Fremderz an, verarbeiten das in ihrer Anlage und verkaufen das Business. Und er kommt von einem ganz anderen Ansatz an. Ich habe mir gerade die Präsentation von ihm angehört, war echt sensationell. Also schauen Sie sich auch die anderen Präsentationen von Inca One an. Das sind sicher jetzt dann nachher auf Commodity und Rohstoff TV finden Sie die Zusammenfassung von der Präsentation auch heute Abend. Das wird sicher ganz spannend und dann verstehen Sie eigentlich auch, was ich meine. George, thank you to have time, and I must say it was really a great presentation. It's a total different spirit than the other Canadian companies. Normally they have me in front of the camera. You bring a total different business approach to them. First, you are in the toll milling business, and I explain a little bit. The toll milling business is what this means in Germany, and that you take no risk about mining itself, find something into ground, so you buy straight ore from the miners, and maybe you can explain a little bit which kind of ore you buy and what is the big difference between your business model and the business model what normally mining companies run.
Yeah, fair enough. Well, we were in, or have been in Peru for a number of years, and in Peru there's been a lot of changes have happened, and they call it the formalization process. And what Peru's done is taken a very innovative approach to the small scale or artisanal miner sector. And small mining and artisanal miners are in many, many countries around the world, both in Africa, Asia, South America, Central America, Mexico. And when we were down there many years ago as an exploration company, we took a look at this business, and because they're going to change the rules, we saw a great opportunity. In the small scale sector, these mines don't process their own ore. They just mine it. Typical investors in North America, Europe, what they do is they're investing in companies that both find a resource or buy a resource, put it into production, do their own production, and secure the feed. But many of these companies, they're small mines, don't have the capital or the expertise to process their own ore. Hence, many companies, all in the private sector, I might add, very few companies are public that do this, and there is no one central ore processor or a major that's ever done this and assume that. And that's what we do. We buy ore from the mine, and there's thousands of mines. In Arequipa alone, where we're located with 2 of our plants now, there's 13,700 mines, of which are customers or potential customers to our company. So we have zero mine risk. We know where the gold is. Our opportunity is to go out, work with the miners, pay them fairly, pay them quickly. That's a definite competitive advantage. So yeah, it's a massive industry.
Which grade you normally accept in your plant?
Again, totally different than the most investors is used to hearing. We don't accept any ore under 15 grams or a half an ounce per ton. The whole small scale mining sector is all about high grading. You're looking at average grades between 3/4 and a full ounce per ton of gold. These fellows and companies that do the mining they chase veins. They basically are looking at high grades. Totally different than what you'd be used to in traditional mining.
You say in the presentation you have 4 streams of income.
Yes.
So maybe you can explain a little bit this.
Well, everybody wants to, how do you make money in this business? It's actually quite a simple formula, and what it basically is it's somewhat based on the price of gold, but not 100%. So let's say a miner comes in with a truck, and these trucks come from hundreds and thousands of kilometers away sometimes. We weigh the truck, determine how much ore is in there, and then we assay it. And we're really accurate, as many of the millers in this industry are. We can predict very quickly how much gold is there and how much is recoverable. So then what we do is we take the formula, and it's at 4 steps. Number 1, we take a discount to the price of gold that day. So if gold is selling at $1,100, we take a 10% discount, and that's the gold price that we'll pay on. We take a 10% discount to the US dollar, okay? Then we take a basic processing fee. So let's say that truck is a half an ounce of gold. We'll charge $140 US per ton as a toll fee. Now, as the grades go up, we will charge a higher toll fee, and then we also charge a chemical fee per ton. So those 3 sources of revenue, we capture back one of our input costs, being the chemicals, and then the margin that's created, you're looking at about 60-40. So 40% of the value of the ore is ours, and we pay it. So if, let's say there's the truck has got $10,000 retail price of gold, we'll pay him $6,000 of that, and we make our money for processing the rest.
You pay him this money directly on this same...
On this, so within 72 hours of him delivering his truck, we've determined how much gold is there and recoverable, and we will wire him funds from our bank account to his bank account and pay for it.
So you need a lot of working capital.
We do.
And this is the first question. How much working capital do you need that you can, your mill with 100 tons can run fine? And the second question is, when you get back your money?
Okay. So when we buy the gold from him, we want a number of days of inventory, obviously, on our plant, so that we don't run out of ore. So we maintain a certain inventory level. We crush it, process it, desorb it, smelt it, and from that process, from the time we've bought your ore to the time that we get paid, approximately 40 to 50 days on average. So we need capital. So we have to prepay the ore. So we have to have enough money to buy the ore. And so you're looking at about $5 million per 100 tons of production. So if we have a 100-ton-a-day plant, you have to have $5 million US working capital to fund that cycle of ore.
Okay, that's two questions. How much days you have inventory on your mill? This is the first one, and the second is what's happened when in the time from you buy the ore and the 45, 50 days later, maybe the gold price crashing in them. Do you hedge something, or what are you doing?
2 parts to your question. We like to maintain anywhere from 7 to 15 days of ore in our production cycle, and we're building towards that now at our Chala plant. So that's the ideal cycle. The answer to your question with respect to hedging against oil, we hedge every day, and so we basically we don't take a speculative risk on gold, like you're seeing. At the time of the interview, we've seen gold come off a bit, and gold that we produced at the high, we'd be obviously getting less money for. So we hedge based on that price of the purchase period. So every day, this is much gold's coming in, hedge, done,
analyzing, know exactly what this
exactly what it is, exactly what we do.
So in the last 4 weeks, you're coming up with two major news. Before, you was a single plant company in Peru. Now you bought 2 more mills or plants. One is a little bit in north, and one is next to your existing plant. So maybe you can fill us a little bit in what this means for the company first, and second, when you think you come up with these plans that they run really smoothly and makes a perfect fit into your company structure?
Good question. It takes time to build a business, right? And the key metrics that we were working on this past year was, could we build it? Could we get enough ore? Could we get enough profit margin to feel comfortable to scale up? And we've hit all of those benchmarks as we've disclosed to the market. And then we've always said that we wanted to be a minimum of 1,000 tons in Peru, okay? And we were at 100. And what we determined is we were always looking for the right purchases or the right acquisitions. And in the last little while, we looked at many targets, and the Moen Mining Corporation and the Standard Toll Milling Corporation all came available. We were able to successfully purchase them and are in that process at the time of this interview to do that. And that basically allows us. Now, each one of these plants can theoretically be taken up to 350 tons. There's our magical. Now we control the footprint of our plants to eventually hit our goal of 1,000 tons. But they have to all be permitted to the next level.
When you think you can or get this permitting to these levels?
All 3 plants, I can't give you a specific date. All I can tell you is all 3 plants are being permitted now, and that we're hoping to have one at some point during the end of calendar 2016 to take it to the next level of at least a couple hundred more tons.
But now you can work with them with 100 tons, all the 3.
Yeah, we're at the time of this interview, we're only going to work with the Moen and of course Chala. We're going to take those 2 plants to 100 tons each. That's what the permits allow us to do, and that's the process. The third one, we've not yet made a decision on the standard plant.
Okay, what does this mean on revenues? When only these 2 mills running next year, the full year, what's this mean on revenue base, and what do you think which EBITDA would coming out?
With in light of full disclosure in terms of and all of the things that can go wrong with this business, that we think that, and it's posted on our website with proper disclaimers, we think that it has nice substantial EBITDA. Each plant at full capacity and with the right margins can have an EBITDA north of $5 million each.
So that's mean, my guess, when you both of them running is, we speak from 10 million EBITDA.
Yeah.
What is your market cap?
Our market cap again is at fully diluted with the new acquisitions. Right now, before the acquisitions, around 9 million. With the post acquisitions, north of 15 to 18 million, based on current numbers.
Okay. Thank you, George. This was a great update on your company. Wenn man sich die Zahlen ein bisschen durch den Kopf gehen lässt und man überlegt, dass da mehr oder weniger EBITDA nächstes Jahr, ohne dass irgendwelche Permits dazukommen, bei 10 Millionen ungefähr liegen könnten, das Risiko des Goldpreises eigentlich nicht vorhanden ist, denn denen ist es egal, wie groß oder wie hoch der Goldpreis steht, denn sie kaufen einfach 10% tiefer an dem Tag zu. Dann muss man ehrlicherweise sagen, dann ist die Bewertung der Company extrem billig. Ich werde da jetzt nur mal ein bisschen in die Daten schauen, ein bisschen suchen, schauen, was man da noch so finden kann. Aber von den Rahmendaten muss man ehrlicherweise sagen, ist das echt eine sehr, sehr billige Company, die mit einem ganz anderen Businessmodell herkommt, wo der Goldpreis im Prinzip egal ist, wie er läuft, denn ihr Business wirft eigentlich immer Ertrag ab. Ja, das war's auch aus Wien von Inco One und wir hören uns in Kürze. Tschüss.